Bismillahirrahmanirrahim. Assalamu alaikum. Welcome to Mastering Accounting Skills. Today our topic is chart of accounts. First of all, we will define what is actually chart of account. A chart of account is a complete list of general ledger accounts of a company broken down into subcategories. Chart of account must be finalized in the starting of the business by the managers, and all the junior staff members must be restricted to change or create any new account in the chart of account without manager's approval. It is very important to go through all possible account heads that may be involved now or in future in the organization's accounting structure. Chart of account includes for each general ledger an account code, an account name, an account type, and the description of the transactions to be entered in that particular GL. Now we will see why we need to use a numeric account code for each general ledger in our chart of account. The account codes actually defines the type of account. The guy who is making the voucher will write the account code and the account name in which computer operator will make entry. Account codes are very important because we may have multiple accounts with the same name. For example, a Noor medical store has two accounts in our chart of account. One as a customer and the other as a supplier. Therefore, we need to give a specific code for each general ledger. For the customer account, separate code, and for the supplier account also separate code to differentiate between the both accounts. Or we may have two accounts for the owner of the company, one as an equity investor and the other as a loan provider. The third thing what we will discuss is what is account type. We may have the following main account types in our chart of account: assets and contra assets, liabilities, equity, revenue, cost of sales, and indirect expenses. Now we will see why we need to provide description in chart of account for each general ledger. Description for each GL in chart of account is actually the guidelines for the users of chart of accounts. Chart of account is defined by managers, but it is mostly used by junior staff who are involved in vouching the transactions and also in posting the transactions into the accounting system. For example, we have two accounts heads in indirect expenses. One is office supplies and the other is printing and stationery. At the time of recording, it is possible that the junior staff will record same nature of transactions, sometimes in office supplies and sometimes in printing and stationery. So like these accounts, we need to define what type of transactions will be recorded in that particular GL. It is very important to know the difference among control ledger and the subsidiary ledger. A control ledger summarizes all of its subsidiary ledgers. The balance of a control account equals to the total of all subsidiary account balances. For example, accounts receivable is a control account of all customers, and accounts payable is a control account for all the suppliers. Similarly, prepaid expenses is the main control account of prepaid rent and prepaid insurance, etc. Therefore, it is important for the accountants to know the difference. Sometimes accountants who are not aware of this difference, they directly record accounting transactions to the control account instead of subsidiary account. Now we will see a simple chart of account to review what we have discussed in the earlier presentations. This is in front of us a simple chart of account. Okay, we have first the account code 10100 checking. This is for the bank account, and 10300, this is also a bank account, saving bank account, and the account type is bank. And then 10400, this is a petty cash account and account type we provided bank. And then we have 11000 with the account name accounts receivable, and the account type is also accounts receivable, and the sub account type is also balance sheet assets. So then 12000 is for undeposited funds, other current assets, and it will come in the balance sheet assets. And 12100, this is also inventory asset. If you go through all of these accounts, in the starting we have all the account for the assets, and it is starting from 1. Then you can see the next serial is coming starting from 2. So from 2 in the chart of account, all accounts payables coming, or liabilities, sorry. So 20000, this is for the accounts payable and accounts payable balance sheet liability side. And then 20600, it is Kale Oil credit card. It's a credit card. It is also our liability, and the account type is credit card, and under balance sheet liabilities it will come. So like this. Also we have 20700, due to owner, means this is the loan from the owner and we need to pay them. So it is other current liabilities in balance sheet liability sides. Then we have 24000, this is payroll liabilities. Payroll liabilities, what we need to pay to our staff, all the payroll liabilities. We have federal withholding tax for the staff, FICA payable, and all the taxes at state withholding tax, and these all things, and the employer salary. So this is for the payroll. Then we have 25500 code and sales tax payable. So like this, from 1 all the assets, from 2 all the liabilities, and then down from the 3 it is coming all the equity and equity related accounts, like retained earnings or shareholders distribution, dividends. So all things will come here with 3 code. Okay, 1 is for assets, 2nd for liabilities, 3 for equity, 4 is defining our income. Okay, we have the control account for construction income 40100, and the subsidiary ledgers we have here 40110, design income for equipment rental. These all are subsidiary ledgers, and the control account is construction account. So when we are making any entry in our accounts, we will make in these particular ledgers. So it will automatically, this will add the balance in the main account, control account. It will add the amount there in construction income control account. Then again we have another revenue control account, reimbursement income, and the subsidiary ledgers for this head is mileage income, permit reimbursement income, and freight delivery. Then with 4 we see all the revenue accounts. Then with 5 all the codes starting for cost of goods sold. You can see here all the account types are cost of goods sold. For the main account is control account is job expenses. Then the subsidiary ledgers are bond expense, equipment rental, job material, permits. If we will make any entry directly in the job expense ledger, so we cannot see how much exactly we spend on bond expense, in equipment rental how much we spend. If we will not make entries in the subsidiary ledgers, it will not give us the correct report, because this amount what you need to enter in equipment rental you have entered in job expenses, so it will directly go there. But if you enter here, it will automatically reflect the balance in job expenses also. Then we have with the 5 all the cost of goods sold codes. After that with 6 all the expenses codes are coming. Okay, indirect expenses which does not directly relate to the cost of the product. For automobile we have control account, and the subsidiary account is for fuel, for insurance, for maintenance. Then we have bad debts like this all. So here in this sample chart of account you have reviewed that all the account numbers, they are defining the account type also, that with 1 all the assets will come, with 2 all the liabilities will come, with 3 all the equity and its related accounts will come, with 4 all the revenues are there. So when you see the code you can figure out that either it is an asset, or either it is a liability or revenue or expense. So with the code you can easily find out. I hope the knowledge we have discussed in this video will add value to your professional skills. If you like this video, please share it with your friends. Thank you.